my name is Gail with Traders Help Desk, and today I wanted to go over how to trade the Forex binary signals. The first thing that you really need to know how to do is how to enter a limit order. Now, a lot of people will be using initially a market order, and I do not use a market order because a market order takes this number right here, and if it changes, then your entry price changes as well. A limit order will only enter when that price is touched. For example, even though the sell price is at 55.25, because the limit order is 52.50, the order will not be filled until the price reaches 52.50. It's a big difference between market versus limit orders, okay? Now, the next thing is, how do you default Nadex to limit orders? It's really, really simple. First, you click on My Account, and then you will click on Settings. From there, you will go to Preferences, and right here in the middle of the screen, it says Default Order Type. Make sure that your limit GTC is highlighted, or the little circle is by limit GTC. You can also set your default contract size right here. If you want it to be a default of 1, 2, 3, 4, whatever you want, you just set it right here, and that way you're not constantly changing market to limit or your order size. Now, the next thing I want to make sure everybody knows is at the money versus out of the money. An at the money binary is where price is currently trading. Your risk, if using a market order, will generally be 50 to 55. However, if you use a limit order, you can actually set your entry price at 45 for longs and 55 for shorts. All you have to do is type in 45 if going long, which means you're buying, or 55 if you're shorting the market, which simply means you're selling. And that way you're using a limit order, not a market order. Now, an out of the money binary, okay, generally, if you are buying an out of the money binary, okay, you choose the strike price that is above where price is currently trading. So, for example, if the at the money binary is 1.1700, then the first out of the money will be the strike above 1.1700. When selling an out of the money binary, you need to choose a strike that is below where price is currently trading. For example, if the ATM is 1.1700, then the first out of the money, if you're going short, would be the strike below 1.1700. The risk on the out of the money binaries do vary, but generally you can get an out of the money for $30 to $40. I've been able to get some for as low as $15, depending on volatility for that particular moment. Now, the binary signals look very similar to this. It provides all the information that you need to take a trade. As you can see, it tells you the instrument, which in this case is the Euro JPY. It also tells you the time and the date that the signal was issued. It tells you the price. This is what I refer to as the signal price. And it also tells you the type of binary that you're trading, whether it's a 2-hour or whether it's a daily. Now, you have choices, and the strategy name itself is ATM or OTM. And the reason is you can do either one you want, okay? In this case, if you were choosing to go at the money, okay, then you would set a limit at $55. Remember, the signal said sell, okay? So you set the limit order at 55, okay? Price was trading at 128.80, but the strike price that was closest was 128.82. You could also do a 2-hour out of the money binary. It always will have less risk. In this case, you would go down in price to 128.72. Remember, the at the money was 128.82. Okay? This right here shows you where price was when the signal was issued. Now, a lot of questions have been, oh, will I get filled? Well, if you notice on this chart, this is a 1-minute chart, and I wanted to show a 1 minute so you can see what happens within a price bar. This price bar went up, this price bar went up, this price bar went up. So this went up to about 90. That would have filled, more than likely, that would have filled your order for $55. Okay? Now, generally, if your strike is at 82, okay, price simply needs to move up to 128.84 for that order to be filled. Now, that's in general because premiums change all the time. But just the very essence of a price bar normally will get you filled for at the money. And again, the out of the money, you just set your limit order. Okay, this would probably have a risk of about $35. Okay, it could have been $25. Okay, but again, you just set your price in there, and more than likely, you will get filled. Now, these are the rules for your profits on a 2-hour binary. If price moves 2 strikes above the signal price, okay? Now, this is on the Euro dollar, USD JPY, USD Swiss franc, Aussie dollar. They have a 4 pip strike width, as well as the Aussie yen, which has a 5 pip strike. Now, if price moves 1 strike above your signal price, then you would exit on the Euro yen, Euro British pound, US CAD, British pound dollar, British pound yen, okay? Or you can allow it to expire. The last 5 weeks of measuring the signals, 75% of them have expired in the money. So which strategy you use is up to you. When I measure the results, this is what I use right here, okay? If it moves in our favor by 2 strikes or the 1 strike, I'm measuring it, okay? In this case, the signal that I showed you just a few minutes ago, if you had chosen this 128.72, it expired in the money. If you had chosen the 128.92, it expired in the money, okay? So either one of these actually did expire in the money. Now, beginning this week, we are also going to have daily binaries, okay? The daily binary signals will be on the USD JPY, US CAD, Aussie dollar, British pound dollar, euro yen, British pound yen, Aussie yen, USD Swiss franc, and the euro British pound. Now, this is important to understand, okay? You use the 11 a.m., 3 p.m., 11 p.m., or 3 a.m. You want at least a minimum, okay, of 3 hours remaining in your binary option, okay? I do not recommend the 7 a.m. and the 7 p.m. daily expirations, okay? Now, this means if the signal comes out, for example, 2 p.m., okay, don't go in for the 3 p.m. you have to choose the 11 p.m. expiration. Okay, this is the only thing that actually makes trading the dailies a little bit more complicated. You have to make sure you have enough time for this binary to work in your favor. Now, profits on the daily binaries. All of the daily binaries have a 20 pip strike, okay? If price moves 2 strikes, which is 40 pips, above the signal price, you take profits, or you allow them to expire. One of the two. Now, and this is something that some of you may understand, some of you may not, okay? Let's say that the signal comes out, and let's make this simple. We're going to use the 1700 area again, okay? And let's say that it tells us to go long. And if we look at the daily expirations, okay, there is one at 1700, okay, and the next one is at 1.1720, okay, and let's say that the risk on the 1700 we can get for 45. That's an at the money with a limit order. Or we could do the 1720 for 30. Okay, I'm going to choose the 1720. Okay, I like to limit my risk. Now remember, I'm wanting this to move 40 pips above the strike. Okay, all right, I'm 20 pips above the current price. Okay, so that means if it goes to 1.1740, then I have made probably just as much as this one, but I did it with a lower risk, okay? Because when this moved from 1.1700, it went to my strike, which is 1.1720. Normally, I have $25 there in profit with that move, okay? When it goes to the next one at 1.1740, which is where I'm going to take profits, then I have made another, well, total, it would be about $45 to $50, okay? And I was able to do this while only risking about $30, okay? This is why I typically will tell you I'm using a combination of out of the money and at the money, just depending on how price is moving, okay? My favorite are out of the money, okay? Could you do both? Could you do an at the money and an out of the money? Sure. There's no reason why you can't do that, okay? It's all up to you and what your risk tolerance is, okay? Now, here's a daily example. The euro yen had a signal on it, either at the money or out of the money. It was a daily June 1st at 11 a.m., okay? This is where it told us to buy 127.35, okay? Right here, when it made that low, that's where the signal issued and said you need to buy this particular binary. Okay, now remember, this was your price, 127.35. Well, you can see there's no 127.35 here, okay, and you needed to buy, okay? So either you had to use the 127.40 or the 127.60 binary. You can also see that it paid out on both of these, okay? That means it expired in the money because the expiration price was 127.73, okay? Very easy to trade these binary signals. Now, before we go on to the next part, I just need you to take a moment to read over the historical performance. This is a legal disclaimer that I have to show, okay? Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, now that we have the legalese out of the way, this is the historical performances. On the daily, okay, the actual historical profit percentage 66.67, the Aussie yen 80, the euro dollar 67.93, the euro yen 69.54, British pound dollar 65.88, British pound yen 64.04, euro British pound 63.12, USD JPY 70.1, USD Swiss franc 66.81. The worst performer is the US CAD at 59.88. Now, on the 2-hour binaries, the Aussie dollar 62.45, Aussie yen 81.08, euro yen 63.81, euro dollar 59.53, British pound yen 74.44, British pound dollar 60.84, USD Swiss franc 59.68, USD JPY 60.69. Now, I really want you to pay attention to the lowest ones, which are, if we averaged them up, would be right at 60%. Okay? So this is historically from 2011 until now. Historically, this is what the strategy has produced. Okay? So now let's go and look at the fact, do you make money every single month? No. And this is what people do not understand when they come into trading binaries. On this particular one, and I've marked out the dollars and losses because none of that matters when trading binaries. This is run on the spot Forex market. So for June, profitability has been 20% on this particular currency. In May, it was 66.67. Here, it was 41, 66, 80, 60, right at 65, 70, 66, 47, 60, 52, 55, 60, 56, 65, 65, 42, 80, 64. Remember that 59% I told you about? Okay. So if you look at this, okay, this month so far would be a losing month. This month so far would be losing. If you go down, this would be losing, 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 down to here. So in this one, well, this one too, we're going to mark all of these. So this is 1, 2, 3, 4, 5, 6, 7 losing months. Versus how many winning months? Okay, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 versus 12 winning months. This is the difference, okay? And this is really what trading is all about. It's minimizing these and trying to capture as many of these as we possibly can. Okay, and remember, June just started. So June could actually turn into a winning month. Now, again, going back to the 59%, okay? So remember, we have 59% over here. And that's what the historical performance report says was the lowest. Let's say that you were able to capture $27 of profit on 20% of the trades, and you allowed the remainder to expire in the money, okay? You are risking $45 per trade. That's an ATM trade, okay? Now, this is using a 60% profitable percentage. This is potentially what your equity graph could look like. This is your losing month right here. You can see it there. You can see it here. You can see it over here. You can see it even in here. Okay? Remember, these would be the 7 months that strategy lost money. Okay? But overall, this was a good trading strategy. But if you quit during this month, guess what? You were not on board for the winning month. Okay? This is at 55%. Okay? In other words, 55% of the trades are profitable. Again, your risk is staying the same. It's 45. Okay? You're taking $27 on the remaining 20%. On 35% of the trades, you're letting them expire. And you're also doing a break even on 5%. Okay? And what does break even mean? That means if it suddenly pops up and then comes back and it looks like it's going to expire under the strike, you exit. And you want to capture at least $2 to cover the cost of the trade. That's a break-even trade, okay? What if we used an out of the money, okay? In this case, you're risking $35, okay? So you risk $35 per trade. You capture $26.25 on 20% of the trades, and you capture $52.50 on the remaining trades. Okay? Now, your losses would be capped at $35. Again, this is using a 55%. Okay? 55% winning percentage. This is what your equity graph would look like. Okay? Of course, you had to withgo this little drawdown here, which was not really significant, but for some people it may have been. Okay? Again, you had a drawdown here. You had a minor drawdown here. And then what happens? It takes off again. This is what trading is all about. So I hope this helps you identify how to trade the binary signals. We do have the dailies coming on board on Sunday, and hopefully we may even add some futures contracts in the future. We're still debating that right now. Of course, if you have any other questions, you can always email me at gm@TradersHelpDesk, and I'll be happy to answer your questions.